Hello friends, greeting from Freedom Factory. Today we are going to again take a very important deduction which is ATGG. This comes under chapter 6A like all the other 80 sections, and ATGG again is a very interesting deduction again which many people don't know really about this. Now what is ATGG? I have explained to you some time back on how a salaried individual who has something called an HRA in his income can take benefit of the deduction of HRA by probably giving rent to his relative or to his parents if he doesn't own the house. In the similar way, there are people who are salaried people but who don't get HRA. They don't have a allowance called house rent allowance in their salary for which they can get this HRA benefit. But those people who don't have HRA in their salary, and for all other business and professions, this ATGG is a rental deduction provision section. So here, those people who don't have HRA in their salary, and business and professionals who anyway the HRA concept doesn't come because it's applicable only for salaried class where they get an allowance called HRA. For the business and professionals there is nothing like that. So therefore the business and professionals and people who are salaried who don't get HRA can get deduction under section 80GG for staying on rent. So if you are a business professional or a business or a professional, or if you are getting salary which does not have HRA, and if you are staying on rent, then definitely ATGG can give you that deduction. Now the deduction is maximum 60,000 per year, and whatever rent you pay, from that you have to minus 10% of your total income. So there are three figures that you have to drop. First figure is basically 60,000 rupees. Second figure is whatever rent you are paying, from that you have to minus 10% of income, find out what is that figure. And third will be 25% of income. So you have to have rent paid minus 10%, find what is the figure. Then 25% of total income, find the figure, and then 60,000. These are the three figures. The least of all these three will be allowed as a deduction, which is very important. For this deduction is allowed if the SSC does not have his own house within the metropolitan or the town area where he is staying. He should not have his own house. That's the only thing which is not in the HRA. In the HRA, even if he has his own house within that limits of that city or metro or town, he can still take that. But here, if he has his own house, then he cannot take the ATGG deduction. Secondly, this deduction is only allowed for the old regime. It is not allowed for the new regime, and therefore that is one more caveat which is there. And if in the old regime somebody has to take this deduction or wants to avail of this ATGG deduction, then he has to fill a form 10BA which has to be attached to the income tax return when filing to basically get this deduction. The whole idea about telling you about all these is basically because these are things which the common man, the layman, does not have access to or information about, and therefore therefore the choice between between going for the old regime or the new regime is very distinctly, clearly, objectively possible if you have all information of all the deductions that are available in the old regime compared to what is not available in the new regime. And therefore when you do the actual calculation, you will be able to come to know which regime in which regime you have to actually pay lower tax. You can approach Freedom Factory, our personnel, basically to help you to decide between choice of the old regime and the new regime. And also we have something called the 4Q process, which is a very interesting, important process about your own life, and involved in all that. We also will help you with the income tax part of it. So definitely please approach, and we have given the details in the description box. So please feel free to contact us. and we can take forward this whole calculation and explanation for you to help you to decide professionally what should be done. Thank you very much.